Hi, very good morning to all of you for the FNO session. Today we'll be talking about and showing you through the website demo and the mobile app as well of various new features, new tools that are there when you trade in FNO, and importantly discuss some of the risk management features, risk management tools, which are very, very important while you trade in derivatives. So I'll request my colleague to just start the screen and just to also set up the context. The tools that we're going to discuss will be more on the features and options side. We will be little basic. We'll not go to very advanced discussion. So this is just okay, kind of a thing that I wanted to share. And if anybody wants to ask a question, you can please feel free to put up on the chat. We will definitely take up all the questions on the chat itself. So when you log into ICICIDirect, this is what the screen that you see on the FNO section. So the first and the most important thing, which anybody would like to look at is the watch list and the charts on the watch list. So what we have on the left hand side, as you saw here, watch list, which you could open up. Just on the main screen on the left hand side, you can see here the watch list, and you click on that, and then it opens up your watch list with an inbuilt chart with ability to trade. So there are many features that will just run you through, on the watch list. So first of all, on this watch list, you could add in equity, cash. You can add in futures and options. You can add in, commodity currencies. So it's a combined watch list across asset classes, and you can keep on adding your favorite stocks, whichever you want to add. So some of it, let's say a Nifty futures or a call options. You can keep on adding these stocks on the watch list and create multiple watch lists. It's very simple to create. Now coming to the point which traders kind of look at. Whenever you're trading, you're looking at the chart of any stock, any contract. And herein there are two things that we've introduced. One, we've introduced a trading view chart, and the second is a trade, charts IQ. So there are both these, charting libraries which are available. We can just, just show you the trading view chart as well. Just toggle between charts IQ and trading view. All the indicators, 103 indicators are available on the trading view charts. And, similarly on the charts IQ, you will have, all the various indicators available. So we'll just run you, some of the sample things that you can do on the chart. Let's say, you want to look at, there are candles that you could look at, 1 minute candle, 5 minutes candle. You want to do a study. Let's say you want to add the volume, right? And let's say we take an options contract, which is more, people trade more. So let's just look at, let's say a 33,000 call in Bank Nifty. We just can add it here. Or you can just add anything. So you can just add CNX and you can write 33,000 and, the calls and the puts comes in here. So let's say the first call, which is here, which is 33,000 call. We just taken that as a reference. So with this charting library that you see here, there are, a lot of studies which you could kind of do. So let's say let's build the volume profile on this charting chart itself, so that where people are buying these options. So if you look at this bar which is on the right side, you look at it at around 5. If you just click on the bar, the max bar which is there around at this price, around 516 is the maximum time, maximum positions have been taken. So along with the price, you can look at the volume bars at which the volumes have been created in the market. So that's, the price, the volume profile. You could add in indicators like, let's say, Bollinger Bands. Multiple indicators that you feel, you want to study. There are more than 100. I'm just looking at some of the popular ones. And, people look at these bands, they on the upper side of the band, people, typically go short, and on the lower side they add. So I'm saying you could kind of create all the, chart, studies that you would want. And these are all real-time quotes that you're seeing here, and along with the volume profile where the volumes are getting distributed in this. So if you look at it, right now, Bank Nifty, this particular contract is at the lower end. So I'm saying that, what this would be saying is that, there could be a bounce back, and also it's below the moving average. So all that indicators, is what you could use, and, you could create. Let's say we can add indicators like RSI, whatever, other few of the common indicators, which we can add here. So, you can see whether, they're overbought, they're oversold. You can see this level, over the last, few days, few months. These charts are all real time available to you. So, and, there are multiple features on this chart. One is you can even create multiple charts. So, let's say you're tracking 3-4 stocks. So you could even create a chart of 4 stocks here. And you could just add in whichever stocks are your favorites here. And at one single window, you could, experience the chart. And, you can just keep this as a login. You can just keep it here. And so that, your prices are real time, these prices are real time updated. And you can just look at then deciding a trade. So this is what we have opened up. We have opened up a window, single window with multiple charts. So you could have a bank nifty, you could have a nifty, you could have an options contract, you could have a stock, Reliance. I'm saying you can have customize your entire window experience, and look at the charts, look at how markets are moving, and then decide to enter, exit. So all that, from a trading perspective, is very critical, and this kind of information is available to you in a very seamless way. The charts are available on the mobile platform also. The web platform gives a bigger screen, and hence, people kind of look at that more. But the charts are available on the mobile screen as well. So that's one. You could also trade from the chart. Yeah. So I'm saying, you want to, let's say, trade ACC. You can put up a price point. You can put the quantity, and from that price point itself, just enter the quantity, and your transactions, it will take you to the trade window. So and the products as well, because we understand that many of our customers are doing, let's say sometimes intraday, sometimes cash. So the product selection is also there, and from the chart you can just plot it and execute a trade. So the watch list, basically, along with the charting ability, is the first screen which a lot of people, traders, are at. And you could kind of save as well. You can give your name as well to any of the charts that you want, and the next time you come to a different stock, it just relays it up on the same screen as well. Also, from the candle perspective, you could look at a 1 minute candle, a 15 minutes candle. You could look at all different type of chartings, candle sizes that you want to look at before you want to decide and trade. So the charting ability, as we said, you could also look at a dark mode as well. So some of the people, prefer looking at dark themes. So you could look at, creating dark modes as you feel appropriate. Yeah. So this is on the chart side. We could go back, on the website. We'll go run you through many of the features. First, let's run you through Option Express, because, that from a data perspective give you certain insights of what are the trades that you should look at, what are the data points you should look at, and then get into, getting into trades, margins. So you see on the right side, Option Express is here. So you could look at it. And the first thing, you go this to the option chain, which is available here. You just click on the option chain. And what it opens up is, it opens up the at-the-money contracts of Nifty. You can add a bank Nifty, or, you can add any stock. And, there are a lot of information. So let me just, get the Greeks first, which is the option Greeks. So if you just click up on the, show Greeks, it will show you a live option chain. It is showing you the Greeks, which are very important when you're trading. So let's say 16,150 markets, around 16,150 levels. So if you look at the IVs on the call side, the IVs are around 37. And if you look at the, deep in the money calls, the IVs are around 40. So, and also what it is showing you is the Vega, so which is, the volatility, which is 3.7. So the point is that, suppose, there are two scenarios, right? One is the IVs were to shoot up, or where the IVs were to kind of subside. these are elevated levels at this point of time. So no news, on the geopolitical side, the IVs shoot down, or if there is sudden news on the geopolitical side or any news, the IVs shoot up. So if you look at it, just look at it, the IV is around 3.37. And if there is, let's say, a shoot up in the IV, even if markets have to remain where they are, the options prices will increase by, if let's say it goes up by 2 and the IVs, the Vega is around 3.7. So the option prices will move up by 7.5 rupees, just because there is an increase. And similarly, there is a decrease. So if the IVs have to fall, markets have to cool off during the day, you will suddenly see that the option prices have actually come down. So on a real-time basis, you could look at the IVs, you could look at the delta of the contract, and many of you would be aware in options more so, if when you're buying something, market moves up by 100 rupees, the option prices don't move up by 100 rupees because it's not one. The delta is not one. So you could see here which contracts are you buying, what is the delta to the market. So let's say, the delta, if you see here, to closer to the money contracts, you will see 0.48, which means if market moves up by 100 points, the option prices will move up by 48 rupees. That's what the delta that you will see here. And similarly, you can also see theta, how much prices, if nothing has to happen, how much prices does the, options lose. So all these information is available here on a real-time basis. When you're, you could look at the option chain. These are live prices, and you could even look at buy sell from here as well. So that's the first thing, from a trade perspective, which you look at. Also, some of the data points that you can also look at is the option open interest, which is there, in the markets. And on the open interest, you could look at where the positions are getting built up and where the positions are getting changed. So if you look at this big bar, which is a 60,000 put, a lot of put positions have got added. Now, it means two things. One, it means that, because the positions have got added, and if you look on the call side, this call, just click on the green bar, big bar on the call side. Yeah, it's around 16,100. A lot of calls have got added. So people are expecting, on the put side, markets not to fall below 16,000 levels, and 16,100 is the kind of right now cap at the call side. Now, we will show you one information further, and then the interpretation. You also look at, this is the right now current position. So where the maximum calls are at 16,000 levels, maximum put, sorry. Now this is important to know because what happens is if markets were to break 16,000 levels, and a lot of puts have been written as 16,000 levels, what happens is if markets had to break it, these puts, the put writers will have to cover, and then there is a chance of a sizable fall further. So I'm saying it gives a protection till the time it's not broken. But if it's broken, there is a sizable fall that you see as well in the markets, because the put writers will have to cover at these levels. So that's from another thing that you could look at when you're just getting into a trade, just to understand how markets are. Look at some of the option stats. Look at the RSIs. Are they overbought? Bank Nifty RSIs just yesterday was around 18 levels. So, you could look at the RSIs, you could look at the, volumes at which price people are accumulating the contracts, the charts, and then kind of, decide your trades. So that's from an information perspective. The further, if you go to a research, landing FNO page, just log into the FNO section, you will see, our derivatives view on a daily basis. So if you just click here on the left-hand side, derivatives view, what ICICIDirect research team, we have a full house team who looks at the markets and kind of gives what are the important levels that you should have, what are the stocks that you should look at. It just gives you an overview. Just a minute, if you read it, you will get some sense of the markets. So just come down the screen. Just come down the screen. So, it will show you what are the key levels where the open interest has got built up, what has happened to the market. Just keep what are the pivot levels for the day. So for Nifty, for Bank Nifty, it will show the key pivot levels. Just come down the screen. Yeah, also showing you the call put distribution, where the the additions have happened, where the in which futures and options contract have long options been built up. So all the information that you just a minute read will give you certain information that you should look at. I mean, what are our intraday recommendations? So all that information is available, just so that, when you get into trade, what is our view on the market, I mean, and what are the key levels for the day, so that's the thing that comes out. So we can go back to the, I mean, you could also look at it that, sorry, just stay with that sheet. I mean, where are we seeing? I mean, if 16,000, just stay down, just scroll down, move down. I mean, above 16,000, 16,500 is wherein we are believing that this will lead to short covering and which will trigger a fresh move. So hence the information inputs are all available on the platform. You can just go to the screen. Right. So that's from a little bit of information side. Now let's get into the trade side. So when you get into a trade, one of the things that you want to look at is the margin calculator as to what are the margins that gets charged in the position. And also importantly, we'll also speak about, risk management, which I think we'll also get to see in the margins itself. So let's say, we want to do a simple Nifty futures contract. And, I mean, let's say just do a Nifty futures. And you will see here, I mean, just add the contract. You will see what are the margins, So I'm saying if you're adding the Nifty futures straight away, let's say you think that the market is going to go up, you see the margins around ₹1 lakh. Now, the important point, which I'm sure all traders, and this is not just for futures, but in options as well, will show you, is the manage the risk. Because in this market, I mean, which is moving up 300 points on an average, intraday basis, and then, there are overnight risks. To manage the risk is the most important thing, and that there's nothing more to that. So if you also, what happens is when you add a put, let's say, we are going long in the market, and we could simply go and add a put options just to, hedge ourselves. And, we could do a little deep out of the money call, 16,100 it is. Let's say we do a 16,000 put options. We buy a 16,000 put options here. Okay. So what, you will see, observe two things. One, you look at the, margins now on the position. The margins have come down from ₹1 lakh to 28,000 rupees. So just because you have built a hedge, so what is it doing? It's doing two things. One is that it's protecting you against the risk, which is, again, the single most important thing in trading. And, it's also optimizing the margin. The margins have almost from ₹1 lakh has come down to 28,000 rupees just because you built up a hedge on the position. So that's, I mean, and you could look at, let's say if you want to, if you feel that 94 rupees is a high cost and you want to kind of, have cheaper options, you could just change the options, let's say from 16,000, to 15,800 or 15,900. It creates another 200 point risk if you're going as low, but you can also look at it, that your margins get optimized. So, so that's a very important thing when you get into trade. I'll get into some of the option strategies as well. A lot of people write options, a lot of people buy options as well. So we could kind of just run you through some of the option strategies, and we could delete the futures. So let's say, so one of the popular strategies which people do is, I mean, that is popular, I mean, because many people do it. I'm not saying it's right or wrong. Short strategies, people sell call puts or strangles. So let's say let's try to do a short call sell and a put sell. And, we're going to talk about how do you add risk management so that in case you've done, let's say a 400 point out of the money call pull sell, in case market had to move, how can you hedge your position? So let's say not 15,900, let's say right now 16,100. So let's say we sell a 15,800 put, right? So that's the put that we have sold. Let's add this contract. And let's say we sell, so you see the margins here, 83,000 is the margin. Now let's sell 16,500 calls, right? So, so we add this, we're going to sell, so we will, because the puts IV is higher, let's do a 16,400 call instead of 16,500, just change the strike to 16,400. So you will see what has happened is, you've added, right? This is a call put. You look at the margins now from 1,72,000 rupees, the margins have come down to 1,05,000 rupees. Now, still this is a unhedged position, because if the markets had to go down, let's say the puts calls will make money and the calls will expire worthless, but the puts are at significant risk. So what you could do is, and what is very important to do is just buy out of the money, put options. So let's say you could go and on the put side, if you've sold 15,800, buy 15,700 calls, puts. Yeah, 15,700 puts. Now, I'll just show you how it, and let's on the call side also, let's buy 16,500 calls. We'll show you the payoff analysis as well, but just to show you what is happening in this trade. Now, what has happened in this trade is that your risk is protected. First of all, there is an inflow in your account, right? Because you've sold options and you've bought higher deep part of the money options. So there is an inflow in your account which has happened in this trade, which is what many people actually intend to do when they're option writers. But the risk in option writing, and we have seen this significantly over the last, this has got, over the last few days, you will have witnessed, has got heightened, is the risk when the markets really move. When you have bought the options as well, instead of selling, you have built a hedge, and the maximum risk is you've taken a risk of 100 points, and the premium inflow is which further cushions you. Now, from a risk management, this trade is far more risk managed. And look at the margins. The margins, instead of 1,72,000 rupees, has come down to 37,000 rupees. So the margins have become optimized because you created a hedge, and you could create multiple lots now. So you could create, let's say, instead of 50, you could do 100. So you increase the contract size, and your margins are optimized. There is inflow, but the most important thing is the risk has been there is a risk which has got hedge which has got built into the position. So you could calculate your margins when you're getting into trade, and let's say we can show you certain of the payoffs as well. How does the payoffs look? And we'll show you some for, let's say, for this position itself, and some of the positions will go to the payoff analyzer. So if you just click on the plus sign here, you see options payoff analyzer on ICICIDirect, right? So you click on the options payoff analyzer. Let's say we do Nifty, and you could create dummy positions. If you already have a position, it just type the stock code and show you the payoff analyzer for this position that you hold. So both are available. Right now we're creating certain dummy positions. We'll create the same position, 15,800. Let's say we're selling a 15,800 put. We feel that over the short term, there may be a bounce back. I'm just saying, that's the strategy we're creating. Now we will, buy a 15,700 put, because you're sold. So, just to hedge ourselves, we are buying, and we'll first look at the strategy itself. This itself. There is an inflow, if you see here, of 16 rupees on the trade. No, yeah, just stay with this. Yeah, just delete this row, and let's just look at the payoff for this chart itself. Yeah. So I'm saying what you are doing is you're getting a payoff analyzer of what will happen at various levels in the market. So at 15,700, because there is a protection that you already have, the max loss that you can have on this strategy is 4,200 rupees. That this is the max loss. There can't be a max, bigger loss that you have in this trade. And in case markets were to move up, the max gain that you have on this strategy is 85 rupees. And the margins, we've seen the margins as well. It's, not a very significant margins that are getting charged. So when you're getting into a trade, you could look at this as to your payoffs, and then you can even adjust your trades. So let's say this was just a put, when you were writing puts and buying out of the money puts. So let's build an iron Condor strategy. So let's add some more positions on this trade itself and show you. Let's say we want to add, let's say, calls now, 16,400 calls we want to sell. Yeah. So we want to sell 16,400. Yeah. And we will buy another 16,500. So we'll hedge ourselves. The margins are optimized. We've seen the margins is as low as around 37,000 rupees, but it is hedging it. And this, now you can go and compute. So now if you look at your payoff, you look at your losses, and you can look at what levels of the markets where your trade can go wrong. So and again, if you already have a position, this will automatically pre-fill all the data and show you. So you don't have to worry about filling the data. It's already, all the information will be available. So if you look at the markets now from 15,800 levels, just keep on coming down. Just on the payoff charts, till around 16,400. So 15,800 to 16,400 markets remain. Your profit on this trade will be around 1,500 rupees. and you can also see what your maximum, what your losses, if the markets were to move up, will be. So the payoff analyzer gives you that kind of understanding, insights when you are trading. Another thing that we've done is you could increase the volatility, right? And this is portfolio volatility. So it's not about, a particular contract maybe have a different IV, a put will have a different volatility. At a portfolio level, if suppose the markets, the volatility were to go up or the volatility were to go down, then how does your payoff changes? That also is available. Let's say, you increase this by 2%, and you could see, your payoffs, just click on compute. Yeah. Your payoffs have changed. So you could change the IVs, you could change the volatility, incremental volatility on the positions, and, look at how your positions will be. So this is further available when you're trading on ICICIDirect platform. So now let's just go and let's just do a simple trade. And then we will also, let's show you a basket order where on the basket order, you could optimize your margins and then, place. So let's just place a first trade first, and let's just place a trade, and then we'll show you. Yeah. So so you want to add any contract. Let's say you want to do Nifty, and you want to do, let's say you feel the markets are going to go up. So let's say you want to buy 16,200 calls. You can click on out of the money here. Yeah, you can straight away go to these out of the money calls. So let's say we buy a 16,300 call option at this point of time. Buying very deep out of the money call options at times doesn't work because, there is a theta which kind of keeps eroding. So let's say we buy 50 contracts, or we buy 50, and let's say we trade this at market, or we put a limit price, whatever. So let's say we put a limit price of 45 or 50 rupees, so that it comes in our range. So, or we can execute this market as well. So let's just do one trade just to get a sense of, further, and you could just kind of execute this trade. Now, the important thing is, just click on open position. Just go on the open position, not from here. You can go from yeah. So now you could, on a live basis, you are able to see the screen. This trade is not got executed. Yeah, just click on the open position again. You can click on the eye charts. Yeah. So now this is also an important thing that we build in for the trade that you have. Now, see, many times, people are not interested in general charts. For the positions that you've taken, you could click on the chart icon here, and you could look at various important things which are there in this trade. One, you could look at the live streaming charts as to how the options are moving. And again, you could do your studies here. And you also get the option Greeks. So what is the delta? What is the IV? What is the Vega? How the theta has been, the OI has got built up. So all this information which is personalized to a trade that you've taken. These are not general information. These are informations which are personalized to a trade that you've built in is available. So, you can on the right hand side, you can look at, the moving averages. You could even look at the payoffs. Yeah, just click on the table. You could, the trade will not be there, but, the payoffs will also come. If the trade would have got executed, the payoff diagram would also have come. So just go down. You could look at the 5-day moving average, the 20-day moving average. So a lot of information which is required when you are trading, and again, on the position that you have. So 16,300 call, it will show all that information on that particular position. So this is something, which kind of get you further, insights in the trades that you build up. As we see here, you can build in your studies here. All that is completely available on the on the ICICIDirect platform. Now let's just look at, let's say, so we'll do two things. We'll place a stop loss as well, because a lot of people want to place stop losses. How do you place stop losses? We will place a stop loss as well, and we will also go to and show you a basket order as well. So let's say, so we have got two products. One is, so basically stop loss could be built across products. Now there are two products, which is Future Plus with stop losses you see here, and Option Plus, which you see. So these are intraday products which are inbuilt with stop losses. So the moment you entering a trade, you are defining a stop loss in the trade, and then you're entering. So let's say, again, if you want to have to do it, we want to do a 16,300 call, right? So we could just go to Nifty. And you see here, before entering the trade, let's say, we just do that 16,300 call. here. Yes, yeah, that's fine. Anything is fine. Yeah. And you enter the quantity, let's say 50 contracts you want to do. Yeah. And in the stop loss here, in these SL, this is stop loss trigger price, and you could, so 98 rupees the price, you could put a stop loss of 90 rupees, let's say. So when you're getting into a trade, you know that your maximum loss will be 95, if that's the price, 95, 96 minus 90, which is 6 rupees into 50, 300 rupees. So you are very you know what's going to happen, and you can trail the stop losses higher. So I'm saying, if this price, let's say when we enter at 96 goes to, let's say, 100, if we are use this 90 rupees stop loss, you could trail that to 98, so that your profit gets locked. So we can perhaps try to even show that to you. Yeah. So yes, you can go ahead and then execute a transaction as well. So that's, and once you execute it, yeah, right. So and you can go to the open position, and on the open position, this trade is available. You can see the profit loss, and what now you could do is you can modify this. So you just click on modify, and you could trail the stop losses higher. So suppose this is now 97.65. Let's say it goes to 98, 99. This trailing, this stop loss that you see here, just go to the stop loss 90. Yeah, and you could put this stop loss as 97. Let's say just put this stop loss 97. So I'm just looking at the price right now and just putting the stop loss. So you are what you're doing is, and suppose I'm saying hypothetically, if you want to 100 rupees, 105 rupees, you could keep on adjusting the stop loss, so your profits keeps on getting locked on this trade. So that's what's also possible when you're trading. And so let's say 99, 70 rupees is what is trading. So you could put a stop loss at 99 rupees. Let's say just put a stop loss at 99 rupees. Yeah. So sorry, the prices come down, but whatever. I'm saying you could look at the markets, and then 98 rupees. You could place a stop loss at. So this is something which is available. We'll also show you a stop loss ability to place a stop loss and options as well. A lot of people have options positions, and then how do you place stop loss? Yeah, you can, Darshan, you can do that. Let's say 96, you can do that and modify that. Yeah, you modify that, and your order goes through. So now what has happened is that your stop loss in this trade is 96 rupees, and you bought it at 94 rupees, and the stop loss is 96. So you're already 2 rupees in the money, and this will get locked, because at 96 rupees this will get triggered in the market. Now obviously these are option prices, and at times there are price slippages, but at 96 it gets triggered, and if the liquid option 16,400 is liquid option, it get executed around that price. So, and trade which you can kind of orchestrate with all these inputs. So that's on the stop loss side. You could also place a stop loss on the normal options. So Darshan, you want to square this off, you can square this position off. You can square off this position and close this position. Yeah. So you can square off that market. You could so you could very simple to close the position 97.60. The trade is closed. Yeah. And you could just keep on writing on the chat. After initial presentation, I will take the questions which are there in the chat window as well. So now we'll just run you through the basket orders as well. So because a lot of people do strategies, so herein you could create your own baskets, look at your strategies, and then execute and look at your margins, and execute trades. So let's say you start with creating a basket. Any name that you want to take, you can just put up a name. Let's say we want to do a call selling at 16,500, and we'll definitely add a hedge here. So let's say again you can do go out of the money, and you could sell the call. Tomorrow is expiry, so we are selling a 16,300 call is what Darshan is doing. So this contract has got added. You can see the margins here. This is 93,000 rupees, and you can keep on adding positions here, and you will see the margins. And you also have an option to add your existing position and combine it. And if you want to add a new position and you want to see how your margins behave, you could even do that. So let's say you sell out of the money, you can go out of the money again. Yeah. And this time you're going to buy because we earlier sold. So we'll build a hedge on the position. So let's say 16,400. You could do a 16,400 call that you bought. Yeah. So you save this to market, right? And you look at the margins. The margins have come down from 95,000 rupees to 22,000 rupees. And there is an inflow on this strategy with nearly 30 rupees. So there is a 1,500 rupee inflow. The margins are, also you can see here. And you can edit all these information. You want to change from market to limit. You want to increase the contract size from 50 to 100 to 200. All that is possible. And absolutely just touch your mouse and you could kind of keep on doing that. And the margins will keep on changing. I was talking about include the existing positions. So you could look at, just tick mark, Darshan, if you're there on the screen, just tick mark, include existing positions. So if you have any existing positions, those are also kind of, included in that. Another thing, I just want to show you, let's say on the open position page, Darshan, if you just go to the open position page again, what we have done is we have introduced options to multiple, so you haven't created a position. There is an option to, the positions are not there. You could select the contracts which you want to square off. So let's say you want to square off out of 10 contracts, 3 contracts, you could just select those 3 and those only 3 will get executed. So that flexibility is also been introduced. Another thing which is important for traders, is to understand, the concept of margin shortfall, because, now with SEBI has introduced something called peak margin. So earlier, whatever margin that you paid upfront, that was the margin that was required to be paid. Now, the upfront margin is there, but at the same time, during the day also there could be an increase in margins. The position could go into losses. So, the margins increase of the position. You could at all point of time go to shortfall and excess margin. And if you have any positions, Darshan, if you just click on that, you will see the margins which are there. So I'm saying, what is the margin on your positions? What is the margin required? What are the shortfall? All that, you could view on a real-time basis on the ICICIDirect platform. The other thing that now I want to show is the one-click derivatives. And then I'll also come to the stock options as well. So, this is something which we have launched very recently. Some of you would have seen the emails from our side. Now, I'll give you certain statistics. And, March has been a very volatile month. Our strike rate on the calls that our research analysts have delivered for the month of March is around 71%. For the month of February, it was around 76%. So, in the volatility, our research analysts, they've been coming out with stock recommendations and strategies. So it's not just stock. So let's say a bearish back spread in Bank Nifty, which is, so, all that is available to you. And you could even, click and we've back tested. So many of these strategies that you see here, all these are back tested strategies, which our research team comes in, and, you could look at it. Let's say we'd come out with this call in the morning, which was index straddle. So what we did was 16,100 call we sold, 16,100 put also we sold. And we're selling around 290 rupees. And if you look at the combined price right now, it's around 270 rupees. So I'm saying you could, look at our research analyst, and that can give you a direction as to what is the trade that you should look at as well. So one-click derivatives is, if you look at it, it's a very, very simple platform. You don't have to create multiple legs. It's all done. All that you're doing is simply touching and placing an order, and the order goes through. You don't have to, worry about, creating what hedge, which strike to select. So if you're trading in derivatives, you should look at ICICIDirect research as well, when you're placing orders. So these are some of the things. Let me take some questions which are there in the chat window. And, so I think there are a lot of questions. So we'll also show you the mobile app as well. So right now we will go to the mobile app. So how do I know net profit under F&O? We showed that in the market app as well. Is there in the portfolio as well, and is there on the open position. Recently we've launched Trade Racer. So right now we're not covering Trade Racer. Just for the information of people, we are coming with a very enhanced version on the desktop-based platform, which which sure our traders will love. how do you see the portfolio's P&L for previous days? You can simply go to two things. One, you could go to the portfolio, F&O portfolio, and also you could go to the cash projection, which is the F&O. We can show you the F&O P&L as well, which we will show you. I just want to tell you, from an accounting perspective and from an income tax perspective, now that 15th March is the deadline for filing income tax, you can look at the F&O P&L, and the P&L that we made is on cash basis. See, there are positions which are remained open on 31st of March. Now, the conservative income tax practice is that whatever is the cash receipt is the actual P&L that you have. Now, there are certain income tax judgment where notional losses or notional gains have also been added to income tax, but that's wherein there are litigations. From a conservative perspective, even if you have sold options, whatever has got credited to your account is where P&Ls are added, or the P&Ls is made. If you have an open position, that position is squared off, the second leg is squared off in the next financial year, then that adjustment will happen in that next financial year. In this financial year, whatever the cash receipt which has happened, and first of all, there are no prescribed way of income tax reporting, but the conservative prudence practice is on accrual basis, on cash basis, and that's available on the ICICIDirect site. You can just simply refer that for your tax reporting. So this is also a good question. We'll take the prime and then brokerage option as well. So I'm going to take that as well and show you on the prime and neo and the interest. So Darshan, let's just stay to the website and just show on the brokerage side also. So on the brokerage options, there are two options that we have. One, you could simply go to, let's say, my brokerage plan, and then choose neo. So let's say you can click on just scroll down. So let's start with neo, Darshan. Just click on choose neo. So what you see, the brokerage which are available to your applicable to your account when you choose neo. You look at the brokerages. In futures, it is 0. In options, it is 20 rupee per order. Intraday equity is 20 rupee per order. So now this is the brokerage that gets levied to you when you trade in derivatives. Now I'll tell you, who should choose neo and who should not choose neo. We have option of prime as well. So now, also just to tell you, there is a small fee of 299 rupees, which you pay one time lifetime to enroll for neo. Now, traders who are using shares as collaterals, many people use their collaterals and then create limits on that. They should not opt for neo because, there is an interest which is charged at, 0.25% on a daily basis. If you're using a shares, if you're using a cash, which you typically do, this is the best plan to do because, your brokerages are extremely low and 20 rupee per order. So hence you should look at neo brokerage. If you're using cash, if you're buying options, you should look at neo when you trade. Now, there are people, as I said, who use portfolio and then on the portfolio create limits and then use that for selling. We have an option 20 plan wherein we don't charge any interest on the shares. So typically, if you go to the market, people will charge interest on the shares. 50% is what broker client has to bring. In case you don't bring, there's an 18% interest. In the prime or in the option 20 plus 5 rupee brokerage plan, there is no interest, which is charged to you on your shares that you've given. So you just come down the screen. Just come down the screen. You can see here options 20. So the brokerage here is 20 rupee per order and only 5 rupee per lot, right? So you just pay 5 rupee per lot and you get absolutely interest-free collaterals on your shares. So, as I said, if you're using collaterals, then option 20 and prime bill is the right plan for you. If you're using your cash as margin, you're doing futures, you're doing options, then neo is the best plan because, you're getting 0 in futures, you're getting 20 rupees unlimited. So it's kind of the best plan that you have. So that's on the brokerage side. And this selection is online. You could anytime go to the setting options and choose the brokerage plan. So that's some of the questions. Another thing, which is important, which I, is also mentioned in the chat as well. that for Wednesday and Thursday, which are, we're in active months, active periods before expiry, we have a free trade hour. So from 2 o'clock till 3:30, on tomorrow, which is Thursday, and today, which is a Wednesday. And, typically, as you are, you would be observing a lot of volume, a lot of movement happens. I think from a volume side, I can definitely say a lot of volume happens after 2 o'clock in the market. And that point of time, what we have said is for Nifty and Bank Nifty options, whatever trade that you do, there is zero brokerage. So from 2 o'clock to 3:30 every Wednesday, every Thursday, you pay zero brokerage when you trade in ICICIDirect. And the minimum contract, because the premiums are very low, the minimum order size has to be 250 Nifty, 5 lots basically. So that's the thing which is available, absolutely available to every customer of ours. You could just enroll for the offer. There is no charges, and every account holder of ICICIDirect pays zero brokerage on Wednesday and Thursday. So that was one thing that I saw it on the chat. Is there a way to get option leverage? Earlier there was leverage. Yeah. So now the SEBI rules are that there is an upfront margin which is required to be charged, and hence there are no leverages. But if you would have seen the presentation, you can really optimize the margins when you are creating a hedge. The margins, instead of around 1.5 lakh, 2 lakh rupees, comes down to 30,000-40,000 rupees. The critical path is to create a hedge. It helps in two things. One, the risk management is definitely there, and the margins come down substantially. Darshan, if you could just put up the mobile app as well, we can just run through the mobile apps as well. Yeah. So thank you, Mr. Natarajan. Shares his margin. Is there a trailing stop loss facility? We showed the trailing stop loss facility wherein you could trail your stop losses higher. Yeah. What is the difference between a limit price and a stop loss price? So I would try to keep it simple. That, see, when you're placing an order, and we could show that again, we can come back to this question and we can actually show it on the demo, and we could take this question. Tools demo. Okay, sure. So let's kind of run through the this one first, the market cap first. So one, we've launched a new market cap platform, which is what you see here, and this is a mobile app. You could download the mobile app from Play Store or Google Store. So very powerful. The rating on the App Store is around 4.2 star rated. So it's very, people have kind of given a lot of feedback, positive feedback. Also, there has been certain issues, and those have, we've kind of on the latest versions, all those, feeds kind of stops, issues have also been taken care. So this, if you see from an app perspective, gives you a very simple way when you're trading in the markets, right? So, you could kind of add your stocks. Again, you could add in Nifty, Bank Nifty, you can add in futures here, you can add in commodities here. So let's say, let's say add a Nifty futures contract, or in Nifty, let's say you can add a call as well. So, you can keep on adding, just go to the search bar and keep on adding whichever stocks that you're looking to trade, right? So, yeah, so let's just add one option. I think if you already added an option, then it's great. Yeah. So let's say 70,000 call is there. So now just click on 17,000 call. Though obviously it's a very liquid, very out of the money call, but just click on the option chain as well. So you could obviously look at the live real-time depth here. And in the options chain, when you're looking at the Nifty option chain, yeah, so just stay up, that's fine. This is an option chain on the underlying contract. Before trading, that what are the positions which are built in the market. So, here itself, you could look at, that 16,000, we saw that there are a lot of calls which have been built up, 16,100, the calls have been built up. So the information when you're trading, it's available to you real time, in whichever positions you've taken. Let's say, you could look at an Axis Bank or an HDFC Bank, and for any contract, these positions you will be able to see. Just look at, let's say, an HDFC Bank. Yeah. This is HDFC Bank, right? Yeah. Look at the options chain of HDFC Bank. Yeah. Just come down 1400 call. You will see a significant open interest which is built up. Even 1400 puts, people have built up this open interest. Now, if it kind of remains down, these put sellers will have to cover. So you can see that for any stock, just at a click, you could look at the open interest, and you want to buy a stock, you just click on buy, and it's very simple. Just swipe, and then the trade goes through. So, and also what this app does is it remembers your preferences. So if you've come down, come to delivery, it will refer your preferences, show you delivery next time. If you do intraday, next time when you come to the app, it will show you intraday itself. Suppose you're a market, you like to place market orders, so it will only show you the quantity, and that's it. And you can just click on buy, and then your order, and just swipe, and your order goes through. So the app is in very, very simple, very intuitive to use, very easy to use. When you're trading in the market, just go back. You can look at the charts. You can on the bottom side, you can see the orders. You can see the portfolio. Yeah, you can see. And all these are consolidated. So it's equity, F&O, all are together. All these positions that you're seeing are all single positions that you're able to see here. So your equity portfolio or F&O portfolio, all that is something which you can see when you're trading in the markets. So this is on the markets app. Can you please ask on SLTP on placing an order? So we'll go through and place an SLTP order as a stop loss order as well. We'll show you once again. Darshan, if you could just log into the site. There are a few questions on the stop loss orders as well. Yeah. So what if Neo, if you are on Neo and you've taken a position, it's perfectly fine. As the brokerage, as I said, will be charged at 20 rupees per order. That's the brokerage. There is no difference in the brokerage rates, even if you do an intraday trade or even if you do a carry forward trade. So let's just do a, let's say, markets have kind of moved up. Let's say just you want to buy, let's say, a call option again. Let's, just keep it simple. And Darshan, we kind of, So let's say we buy a 16,300 call. Let's just buy a 16,200 call also. We can buy now. Yeah, click on order the money. Yeah, we can buy this call. Yeah, right. And we execute this 50 rupees. Yeah, 50 contracts, sorry. And we execute this at market. So let's execute this trade. And then we'll also show you how to put a stop loss on this trade. So you've done an execution on the trade. You can go to the open position. Yeah. And on the open position, you can see your PNL, your live PNL, and you can see the contract as well. So now this is what you see. Now let's say we have to put a stop loss on this trade. So 65 rupees what is trading at. So let's say to put a stop loss on this trade, and again a trailing stop loss, you just have to click on modify, right? So just click on modify, square off. Sorry, you click on square off here. Not a square off at market, square off, yeah. So when you click on square off and just now do 50 quantity, you can do that. And you click on more. We've kind of kept it simple. So you click on more, not here. Click on more, right? So herein you will see stop loss. SLTP is basically stop loss trigger price, right? So you could put in a stop loss here now of 64 rupees, right? Because you've taken a position, it's at 65.90 is the price. You put in a stop loss price of 64. Now, and you have to put in a limit price. So just put in limit price of 63. The reason why we're putting a limit price is because the stop loss is a market order. It will trigger at market. Now, it is possible that the trigger happened at 64, but in options, because of liquidity, the price may, get executed at any price. So 63 rupees, if you put in as a limit, it ensures that, beyond 63 is not going to execute. So, there is a protection that you got when you're executing this trade. Now you can just click on square off, and your stop loss is put. So, you can click on proceed, and your stop loss is there in this trade. Now, this is an intraday stop loss. We don't have an overnight stop loss. You could come in intraday, and now just look at it. It's gone to 69 rupees, right? Now you could modify this. So just go to the order book, and you could trail your stop loss higher. So, there is a profit on the position. You could go and trail this stop loss, right? So on this ordered quantity, just click on modify. Yeah. And now, 67, you could put this 66 rupees. Yeah, again, go to more. Yeah, go to the stop loss and put that at 66 rupees. So what you're doing is, that's fine. You can keep that at 63 or 65. That's upon your choice. Yeah, that's fine. That's fine. And now you modify this trade. So, so you can modify this. Now what has happened is there is a trail which has got built in. It's gone further. Let's say just click on proceed. That's fine. Yeah, you can go to the open position. If it further goes up, yeah, just click on the go to the open position on this page. If it further moves up, you can further modify this. It's gone to 70 rupees 85. You could make your stop loss now at 70 rupees. So you could keep on moving your stop losses so that your profits are locked. Whenever you trade, just go to the order book and you can further make that to 71 rupees. Just go to the order book, yeah, and modify that and make the stop loss at, let's say, 72 rupees now. I'm saying you could 71. Let's say just do a stop loss at 71. Yeah, and you could just modify this order now. So what has happened is you have been able to lock in your profits. If the markets are going in a direction, and in options we've seen many of the times, markets move up and then it comes down, and the profit that we've had in the position, and now the positions are 78 rupees, the positions would have got squared up. So because that's why you don't see, you can go to the order book and you would have seen now that just click on the executed, you will see the quantity, the price at which it's got executed. Yeah, so it got executed at 70 rupees 85 paisa, right? So I'm saying you today were able to lock in your profits simply because you put in a trailing stop loss on the positions. So that's how you put trailing stop losses. I'll just take a few of the more questions. So one question was that, can we use 100% collaterals for derivatives? Absolutely, yes, you can use. What about the SEBI rule of 50-50 on shares? So first of all, the SEBI circular has been postponed to May. Even had it been applicable now, it wouldn't have affected ICICIdirect customers, because this circular was only to brokers. What SEBI said was, to broker to exchange, there has to be a 50-50% cash margin. From broker to client, you could collect 100% shares as well. So there was no change for ICICIdirect customers at all. So hence the answer is that you could use your shares fully. FI data is available on ICICIdirect platform? No, it's available on the ICICIdirect section site as well. And what we're doing, is that this is a logged in section. Very soon you will see all this information on the non-logged in section. So on your mobile app, on your mobile browser as well, you will see live coach and live data on the option sides as well. One more thing which we'll speak about in brief is the APIs, but let me just take some of the questions here. So one of the questions is, assuming that we've taken one leg of order in Nifty options in morning, and second leg is after 2 p.m. Even the zero brokerage is available. Yeah, absolutely. So it does not matter. Once you're in Neo, when you buy, you have 20 rupee per order. When you sell, it is 20 rupee per order. Now the sell could have been after 5 days, after 5 minutes. It doesn't matter. Yeah, assuming so that is there last funding? So there is last funding, which is a different product. It's available on ICICIdirect. You could use your shares, and there could be cash which gets credited to your account. Now that's specifically for options. There is no funding, but last is a separate product which is available on the platform. F&O at fingertips. We'll show you the F&O at fingertips as well. Yeah, Breeze API. We will show you a Breeze API as well. So basket orders not executed market price. No, it will execute. It is not okay. So the question, let me read this question. This question has said that basket order not executed market price, only buy leg is executed, not sell. So the only reason why the sell leg will not get executed is if there are no sufficient margins on the position. And what also happens in that, in the margin system, let me just tell you that if you have a buy position first and then a sell position, system, when the sell order is going, it automatically recognizes that there is a hedge and the margin itself is lower. if you have a sell position first, then it will take the full margin for the sell position, and for the premium which comes second, the margins then gets reduced. So if you buy first and then sell, the margins will automatically be lower. Otherwise, as I said, if there are sufficient margins, buy sell positions both will go. So markets app lags in the morning with respect to web data. So I just want to tell you that the data feeds are absolutely real time. There has been I would say 1 and 2 days rather. I mean, in the last month, one on the NSE day, and there was another day where there was certain delay in feeds. Otherwise, the markets app data is absolutely real time without any latency. That's the on the web and on the markets app platform as well. So one of the questions is that option plus is an intraday order. Yes, every order has to get squared off before 3:15. If you don't do, system will do it. Options is the positions which you can hold on till expiry. Yeah. So there are multiple screens. It's a very important point. Soon you will see a screen wherein on a single screen you could just touch and key in and place orders and monitor your orders as well in a single screen as well. So you will see that shortly. Yeah, so there is a manual trailing stop loss that we've shown you. That's right. Yeah, basket. So 3-leg and 2-leg orders are not accepting. It will accept. It is only the margins on the position. If there are sufficient margins, 2L, 3L orders will also go. A basket orders are not executed in mobile app. Yes, that's right. Right now, it's not there on the mobile app. We will soon get that on the mobile app as well. If how to unsubscribe to Neo, we could just show you on the site itself. How do you unsubscribe to Neo? You can just go on the platform, and on the platform on the settings section, once you're there on choose Neo, yeah, you can click on choose Neo. If you're already here, it will show you to subscribe. If you're not, it'll show you to unsubscribe. So in this page itself, if you want to move in, you can move out. And many people want to go to Prime, so you can just go to let's say my brokerage plan, and you could go to Prime. This is something which is far beneficial because across segments, the rates are much lower, including cash segment. The rates becomes 10 basis points only, and options it's it comes down to 10 rupees per lot, and there are no interest when you sell your use your shares as margin for derivatives. So you could use Prime as well. So yeah, if there are any questions, you can please feel free to put up on the chat. On expiry, yeah. So just one thing I want to talk about is the positions on stock options before expiry. What happens is that now again, people trade in Nifty, people trade in stock options as well. For Nifty and Bank Nifty, there are no issues because there is no physical delivery that has to happen. But if you're trading in stock options, which is if you're let's say doing HDFC Bank or you're doing any stock TCS, you've got calls and puts. There is a change in the way the margins are computed. What happens is again there are two kind of people: one who sell options and one who buy options. So for people who write options or sell options, there is no difference because you are anyways when you taken a position, you paid the margins on the position. However, people buy options also. Now, what happens is when you buy options before the last 4 days, when you bought an options, you were supposed to pay a premium, right? So let's say DLF 1650 is the contract size. You paid a premium, and the premium was let's say 5 rupees. So you paid a premium of 8,000 rupees. Now, if you bought an option and the monthly expiry, so the monthly expiry, let's say 31st of March, before 4 days, what SEBI says is that for options which are in the money, so let's say a DLF 332 rupees, let's say, and if the option was 325 rupees, which is an in the money options, premium of 8,000 rupees is not sufficient. What SEBI has asked is that the premium, their full margin has to be paid because there is a possibility that the options may not get squared off, and you may have to give delivery of the shares or you may have to give cash. So there is a margin which is then get applicable. Let's say the margins are 20%. Let's just say. So if the contract value is let's say 10 lakh rupees, So the margins required on the position are 2 lakh rupees, but you had paid in 8,000 rupees, but the margins are 2 lakhs. So this gradually increases, from Friday, Monday, from 20%, 20% and on. Now, if that margins has to be there in your account, if the margins are not there in your account, then the positions will get squared off. Now, this is important because, people who trade in stock options and they bought stock options, this is one thing which happens. The other thing is, that there is no DNE right now, which is do not exercise option. I mean, which hopefully SEBI should bring in, and that's what people are talking about. Since it's not there, the stock options position on a monthly expiry gets closed at 130. So for the same month, you can take for next month at any point of time. For the same month, the positions on 31st March for stock options only will get closed at 130. So please do note that when you're trading. I mean, you can yourself close it; it's better, and roll over the positions to next month. But that's an information just I wanted to kind of share. So we've taken. What is the difference between span and non-span? I'm going to take that question, which is coming. F&O Insight. Yeah, if we'll just go to F&O Insights, Darshan, I mean, we'll just show as well. F&O Insights as well. Yeah, I mean, we showed that you have a basket order for, buying, sell. We've shown that that's available. I can combine Prime and take advantage of 2 plans. I mean, if you're in prepaid, then in prepaid, the rates are even goes as low as 7 rupees. So prepaid is the best option. And herein, you can see this is F&O at fingertips. So you can see what are the activities which are happening in the market. You can Darshan, click on heat map. Yeah, and on the heat map, you will again see, I mean, where let's say you want to see the short build up, you can see the short build up, or where the long build-ups are happening. So all this information is available to you. We'll also show you certain of the activities. Let's say go to click on options market. Yeah, yeah. So you can see here the OI, the contract wise OI is available. Yeah, I mean, just kind of move to each of these screens, features, screeners. Yeah. Well, let me just take some of the questions for you. System square off and the traders square off. What is the difference in the cost of trade? Okay. So let me take that question. But, this is what you get to see on the F&O Insight. A lot of information across stocks, key levels, pivot levels, everything. Just click on unusual activities as well. Yeah. So, I mean, this is, so on the F&O Insight, I mean, in fact, there is one more thing which is showing the 15 minutes position level, contracts which are getting created. So that is very important. If there is a big quantity which has got squared off in the market, you can also see that here. Yeah. So there was one question on API. So I just want to show you on API. We will not do a detailed discussion on API, but I just want to show you a lot of people, so as you see here, what you're using is a web platform. And, I mean, things are kind of coded, you're just entering the trade. And on the mobile platform also, it's what you've coded. It's a platform which is you're just entering. On the APIs, a lot of tech savvy people, you could code your own strategies. You could look at data and, you could program your trades. So we've introduced API, our ICICIDirect Freeze API, which are truly next generation APIs because of various reasons, which you will see here. If you just click on the Breeze APIs here, yeah, I'll just open this page. There are a couple of important things here. One, is the data. Now, whenever you're doing any back testing, it is the data which is the most important part. So typically, equity data was given. ICICIDirect, we are, you would see options data and futures data as well. All these are data backdated from 2011. So, there's a 10-year history of rich data, and these are minute level data which is available. So minute level open high, which is called as OHLC candles, which are available. So from a data perspective, both from options, cash market, futures, it is among the richest interface that you will see here. The second is that we are even going to second level data, wherein not even a minute candle, you will see the second candle and you will be able to see the volumes also. So with the volume and open interest, you could do your analysis as to, if this is what has happened over the last few years and if this happens again, what would be results, what would be our trading strategies. So from a data point of view, one of the richest data infrastructure which is available, this API is absolutely free of cost. There are no monthly charges of 2,000 rupees. It's absolutely free for ICICI Direct account holders. There is an SDK documentation here in Python, which you could use, code very simple in simple formats. And if you have any queries, we put in the email ID as well, which is breezeapi@icicisecurities.com for any questions on the API. And there is a community as well, which you can put up. So API is a new launch that we've done, which makes it, very simple for, people who like to code their own strategies to execute trades on ICICI Direct platform. So be that charting platforms, be that APIs, you could, and also now, because our APIs in public domain, people are using ICICI Direct APIs and through third-party platforms are able to place orders on ICICI Direct. So let's say a trader's cockpit or a Tradetron has already connected their, APIs with ICICI Direct, and you will see soon many of the platforms also connecting on the ICICI Direct platform. So that's on the API side. So I think, I just take two more questions, which are the two more last questions. What is the systems difference between system square off and trader squaring off? What is the difference in the cost of trade? So if you're in Neo, if ICICI Direct has to square off your position, which happens typically at 3:15. In fact, let me tell you, our positions are closed at 3:20 for futures. For options, the positions are closed at 3:25 on expiry day. So intraday positions are and the overnight positions, obviously, you can carry anytime. If the systems are closed by the systems, then there is a cost of 50 rupees for that order which is charged. If you close your positions, there are no order charges which are there. So, and it is only for Neo. In Neo, it's only if you close your positions on your own, there are no charges. If the system closes a position, then there is a 50 rupee charge. Also, the recommendation that I would have is that please close your positions yourself, because when you are closing the position, you are seeing the price and you are executing. When the system is doing a sell, it is executing an order at a market price. Now, market prices and options are not very healthy. They can damage unnecessarily. There are price slippages. So, it's prudent or better, to close the positions on your own. And I would feel that the last question, which I can see here, is that how can a monthly expiry on stock options be taken as rollover? Yes, you can. So, we have a rollover window, and there are two rollover windows that we have. One is a simple rollover window, which is where you sell one and you buy one, which is a very, both are market orders which gets executed. There is another rollover window which we have is called spread, rollover with spread. So, as you understand, in rollover, there is a difference between the two contracts. So, you could define your difference. So you want to say that I want to roll over with a price of, let's say, only 80 paisa. So your order will go to the market with an 80 paisa rollover. And whenever that spread comes to 80 paisa, it will automatically roll over it for you. So there is a rollover at spread, there is a rollover at market. And obviously you could do a manual rollover, which is simply by closing the position and then taking a new position. So that's also available on ICICI Direct platform. So on commodities are also available on ICICI Direct platform. I am not getting into a demo of commodities at this point of time. So I can, I think in the interest of time, I'll thank all of you for joining today's session. We will keep on doing more of this, and the recording of this session will also be available on YouTube. So this session is available for you to look at the platform experience that we've had in future. So I'd like to thank you for your time today. Thank you so much.